What happens when three of the biggest companies in history all go public at once? We may be about to find out. I'm Alec Daril, and this is the fastest 4 minutes in finance. For years, some of the most valuable companies in the world have stayed private, but that may be changing. In recent weeks, SpaceX, Anthropic, and OpenAI have all taken major steps toward potential public offerings. So let's start with the numbers. Reports suggest SpaceX could seek a valuation in the range of $1.5 to $1.75 trillion. Anthropic recently completed a funding round at a post-money valuation of roughly $965 billion, and OpenAI has confidentially filed for an initial public offering at a post-money valuation of $852 billion. So put that together and you're looking at nearly a $3.5 trillion in combined value. Now, if these valuations hold, all three companies would immediately rank among the largest publicly traded companies in the world. At the same time, regulators and exchanges have spent years working to streamline listings, expand direct offerings, and let companies stay private longer. The result is that companies are arriving at the public markets far more mature and larger than they did a decade ago. So why does this matter? Well, here's some context. Right now, the top 10 stocks in the S&P 500 make up nearly 40% of the entire index. 9 of those 10 are technology companies or businesses tied to AI, cloud computing, semiconductors, or digital platforms. Microsoft, Apple, Nvidia, Amazon, Meta, Alphabet, Tesla. By private market measure, SpaceX, Anthropic, and OpenAI are already among the largest companies in the world by any standard. Any public listings of this scale would be notable additions to the public markets. That doesn't necessarily mean today's tech leaders lose ground. In many cases, they're deeply connected to those emerging companies. What makes this potential cycle notable is its scale. But here's what history actually shows us about IPOs. LPL Research analyzed over 1,400 IPOs from the last 30 years and found that the average one-year return was positive, about 10%, but the median return was negative. The typical IPO experienced a maximum drawdown of nearly 49% in its first year of trading, and only about 40% of IPOs outperformed the S&P 500 over that period. The lesson isn't that IPOs are bad, it's that size, buzz, and innovation don't automatically translate into investment returns. Understanding the difference between a great company and a great investment at a given price is always the right starting point. The bottom line is this: we could be looking at the largest IPO cycle since the dot-com era, not because of how many companies are going public, but because of how big they are. Whether these offerings happen and when remains to be seen. We'll continue to follow this story as it develops. That's the fastest 4 minutes in finance. Thanks for watching.
Want to become smarter financially in 4 minutes or less? Sign up at fastest4.com to get insights and updates like this delivered to your inbox weekly.